So today will be actually like a kind of a requested video. A lot of people have been asking to do some more M1 Finance videos because I think M1 Finance has actually improved as a platform, and I think there's a few of you guys out there that actually use M1 over Robinhood now. But I use both personally. As you can see, my M1 portfolio has considerably less money than my Robinhood portfolio. My Robinhood portfolio is around like 5K, and this one's only around a little over $100 or so. This is more just like a play around, goof around portfolio. And as you can see here, I didn't actually like lose this much money in like a day. I just simply took out a bit of money because I actually have like a referral link in the description. So if you're interested in M1 Finance, if you click the link below and sign up, you get $10 free when signing up. And I think there actually might be a deal going on where it's 20, so I'll have to check that out. But I'll leave the link in the description anyways. And today I'm going to be going over some specific pies, and I'll also leave the links to those in the description as well. But anyways, one thing I really like about M1 Finance, well, actually, in order to get to your pies, you go over here to research, and then you click My Pies, and you can also click Stocks, Funds, My Pies, and then Extra Pies as well. But today I'm going to go over my pies, and some pies specifically I'm going to be going over mainly actually are dividend ones, because one thing I love about M1 Finance is that you're able to do fractional shares, and because of this you're able to do a sort of like dividend reinvestment program with them, even though it's like kind of different how some other brokerages might have a dividend reinvestment program. But because of the fractional shares, obviously if you get like 5 cents or $1 of a dividend from a stock, normally if you're investing in whole shares, you wouldn't be able to buy that stock until you got enough money to equal the price. But with M1 Finance, you can simply just deposit it back in. I think the minimum amount's like $10 or something like that, so it's a pretty small amount. But anyways, and you could also turn automatic deposits on, which I might show later in the video. But anyways, first pie I'm going to go over. I'll leave the links to these as well. I can just click the share link and share them with you, which is super awesome and really great feature. But anyways, this is my best dividend stocks pie. So last week I posted 2 videos, and they were going over the top 10 dividend stocks in my portfolio. So here is a link that you can click in the description that literally lets you add this to your M1 Finance portfolio if you wanted. So my average yield here, which is actually nice to see, is 3.364%. My expense ratio is 0 because they're all stocks. And this is, let's see, returns based on an initial deposit of $100. So as you can see, the stock market's actually been down for almost the entire 2018. I think year to date, actually, it is down a pretty considerable amount. We're getting pretty close to bear territory, and it is going towards a correction, if I am correct. Not that necessarily means a whole lot to an investor like me, because I'm very long-term. If anything, that's a good thing. Offers up good buy-in points. But anyways, getting on to this portfolio, I'm not going to talk about this one too much because I showed it in my past video a little bit more in depth. So take a look at that if you're interested. So there's 10 stocks here. They're all weighted at 10%, just to even it out. You very well could do them at different percentages if you felt more comfortable about some, or take some out. I really don't care what you guys do. It's really up to you. But this list is 10 dividend stocks that I own in my Robinhood portfolio, and these are the best ones that I picked and choose out of that. And like I said, there's a handful of reasons that I mentioned in my last video why I chose these stocks. But as you can see, pretty high yield here, 3.3%. I think that's like a very safe yield, but also a good one. Anything over like 4 or 5 is getting a little risky. Probably won't be able to pay that out. The only company that has a very high dividend yield like that is AT&T, actually. But they're a company that probably could continue to pay that. Probably not going to increase it like crazy, but I like around a 3% to 2% yield. If you're getting too much lower than that, there might be a good chance that they're not actually increasing it, and they're not going to make it any higher. But if you get one too much higher than 2 to 3 to 4% or so, there's a good chance they don't have enough cash to keep paying that out. So that's one portfolio, or one pie, I guess, that I'll share with you guys. Love the M1 Finance pie feature. Next one, if we go over here, let's see, which one do I want to go to next, actually? Next one, this one I posted a while ago, but I'll share this one with you guys again. 10 dividend stocks for 2018. And once again, 2018 market wasn't very good, didn't do very well, but this one's down a little bit less than the last pie I just showed you. 10 holdings again, a little bit higher percentage, almost 4% here on these guys. And each one of these, I believe, are at 10% as well. Yes, they are. And as you can see, a lot of these stocks are actually repeating the same. The only different ones are Altria, that's not how you say their name, Chevron, Duke, Exxon, Procter & Gamble, and Verizon. So I think about half of that portfolio is different here. And these ones subbed out for a handful of reasons for the other ones. Well, like I said, the other ones were just simply the ones I own in my Robinhood portfolio. But these ones are actually also some pretty solid dividend stocks. I personally wouldn't own a stock like Exxon, and Duke Energy could be one I'd consider owning. But same with Chevron. I usually just don't put a lot of weight in my portfolio in companies like these. I personally wouldn't want to hold 30%. I think you can find better growth elsewhere. But if you're into those kind of stocks, there's definitely a lot of good reasons to own them as well. And Verizon, once again, a good stock. AT&T, very two comparable companies. And obviously all the other stocks I like because they're in my actual portfolio. But anyways, going to move on to a different pie here. And let's see, I just did that one. And I'll go to this one. I think this was another one I used for a video. This one down pretty big. Well, not actually that big, but down a little bit, 8%. Very, very high yield on this one. I think this one was supposed to be a little bit of a higher yield portfolio. I sort of changed the percentages around to make it so. And this one, how many holdings do I have? 12 holdings here. And once again, very similar stocks. Some are different here, like, for example, Budweiser's a little bit different. Or, let's see, what else is different here? Ford's a little bit different. GM is a little bit different. Pfizer, IBM. But once again, all these stocks in this portfolio, in my opinion, are pretty solid dividend-yielding stocks. Some are better than others. I think this is also a good example of another pretty decent dividend yield portfolio. And one thing you're going to notice with all these, as you can see, the stock market's been down pretty considerable. But if you have a high growth portfolio, your portfolio is probably down year to date a lot more than 8%. Sad to say, but it's probably just how it is. These stocks are more larger market cap companies, blue chip, dividend yielding stocks, so they're not down as much. And the next one is, I guess I labeled this sick growth dividend portfolio. I think I made a video solely dedicated on this one. Maybe I'll have to go back and find that and put the link to that in the description as well. But this one, 15 holdings, a little bit lower than a yield, but still very nice one, 3.4%. No expense ratio because it's all stocks. And this one was based on a little bit more growth necessarily than just dividend yields, even though it does have a very nice yield. So you can see here, it did have better returns than some of those other ones. But once I go to the stocks in the list, it'll probably be pretty obvious why. So anyways, let's see. Similar stock, same stock. Apple's a new one, actually. AT&T, Johnson & Johnson. Those are the same. JP Morgan's different. Microsoft's different. Boeing's different. One of my favorite dividend growth stocks out there, actually. Along with Apple and Microsoft, they have an enormous amount of room to continue to increase their dividend if they wanted to. Let's see. Intel has a very nice yield, not yet a dividend aristocrat though, very close. And then Royal Bank of Canada, I guess to add a little bit of diversity to that. Because I don't think very many of these stocks had too many financial companies in them, if I'm remembering correctly. So this portfolio offers a little bit better growth, but also offers a little bit better of diversity as well. And as you can see, I actually had a better return out of this one. So this one, I guess you consider a growth portfolio, considering it was in the green, even though the rest of the stock market has been down a little bit. And I think that's it for the portfolio or the pies that I'm going to show you. But one other comparison I'm going to make. So those three were three dividend pies right there. And actually 4 dividend pies I think I showed you. And then the next one I'm going to go to is this one. I labeled it risky business for some reason. I am not sure why. I think it's because like they're supposed to be like riskier, quote unquote, stocks and more growth oriented rather than like larger blue chip dividend yielding stocks. But as you can see, up 35% this year when the entire stock market was down. So that's a pretty significant number right there. Interesting to see these old pies that I've made, how they've been doing over the years, because I haven't checked this one out in a while. This one was probably made, I don't know if I could find that anywhere. This one has been made and hasn't been touched in a while. But 13 holdings and less than 1%, less than 0.1% of a dividend yield here, as you can see. And that, alone might scare some people away. But then again, as you can see, these returns were pretty significantly better when the entire stock market has been down. So that's another interesting thing to see. But these past couple months has dragged it down a bit more. But anyways, when we go through this one, you'll see a lot more growth-oriented stocks, a lot of tech-based stocks, and definitely almost no dividend-yielding stocks in here. Just off the top of my head, I can't remember if Adobe is. I could look that up later. I'm almost entirely sure none of these stocks have any yields. There might be one that has a dividend yield. But anyways, all these stocks are different than the past dividend dividend portfolios. And I did them at different percentages. Facebook was very high in this one, which Facebook has not done very well. But the rest of these stocks in this portfolio have done pretty well. Netflix has been a great growth over the past year or so. Alibaba's actually been getting crushed a little bit lately. So as you can see in this portfolio, unlike the other one, some of these are really hit or miss. Like some of these I'm doing great. Some of these have been doing very bad, and that's because of just honestly the type of stocks they are. Like these are just more growth-oriented stocks. At least I think a lot of these are. And the way it goes, if they majorly miss an earnings report, they're a little bit more speculative in nature. So a lot of people are going to sell off, even if they are pretty decent businesses. Like Alibaba, I think still has a great business model. Facebook, I still think it has a great business model. If they miss on a couple earnings reports, even slightly, even if it's not as much growth as people were expected, there's a good chance that stock might go down 5 to 10%, which can be pretty significant, for someone if it's a large holding in their portfolio. Then some at the bottom here, Square's actually had some great growth as well. Roku, Grubhub, I haven't been following as closely as I probably should be. PayPal's been doing pretty decent. JD.com, Adobe, love Adobe actually, by the way. NVIDIA, Alphabet, Alibaba, Netflix, Facebook, Amazon. So that's comparing, this growth portfolio, at least what I think is a high growth portfolio, to a portfolio that's just dividend yields. And once again, I made this portfolio a while ago, probably at least a few months ago, bare minimum. I can't remember. I'm sure I've uploaded the video on my channel, so I could see when I uploaded that. That's probably when I made this portfolio, but or this pie. I keep saying portfolio, but the same thing really. So goods isn't great. So these are just some pies that you guys can check out if you want. I'll post the links to these in the description if you're interested in just simply going to them. Super cool feature that M1 Finance has that I like a lot. And I will also post my portfolio pie in the description. So this is like my actual M1 Finance portfolio. These are just all the stocks I hold. It's a lot less diversified. It has a significantly lower dividend yield than my Robinhood portfolio, and it's a little bit more growth based. So I only have 11 holdings here. They're at different weights. Apple's at the top. Microsoft, Amazon, Google, Facebook, Nike, Boeing, Berkshire, McDonald's, Netflix, and Starbucks. So this portfolio is pretty different than the others. A little bit more of a mix of both portfolios, I guess you could say. But other than that, guys, that's it for this video, I guess. I guess one other thing I want to add, if you want, you could always go to the expert pies over here, and they actually have some pretty decent ones. I posted a video somewhat recently, but also one pie that I did not make that you can consider making. You could also just simply go to the funds over here if you're really looking for a diverse portfolio that's just full of ETFs. You could simply just add a bunch of general ETFs like an S&P 500 ETF or like Vanguard Total Market ETF or perhaps like a Dividend Aristocrats ETF like I own. You could just add those into a portfolio, into a pie, and then put it in your portfolio, if you really want to go that way. And also one thing you might want to consider doing as well, if you're really looking for a safe dividend portfolio, excuse me, I'm like very sick, that's why I didn't post in the past 2 days. As you can see, SirDividend.com, really cool website, has some good dividend stock like tips and tricks and news articles, but they also have Dividend Aristocrats list, as well as a Dividend Kings list, and they do some analysis on them. So I'll post a link to this website as well. If you're looking for a secure dividend portfolio, maybe perhaps you just consider only investing in Dividend Aristocrat or Dividend King stocks. But other than that, guys, I hope you enjoyed the video. Like I said, all the links, all the pies will be in the description of this video if you're interested in that, as well as a referral link. And I think if you actually click the pies and sign up, you'll get the referral as well. But I think now the program is actually $20 if you sign up. I think that's like their special promotion right now. So definitely, if you're interested in M1 Finance, consider clicking that link because I get a little bit of money from that as well, which helps support the channel. But other than that, guys, thanks for watching. I hope you enjoyed. And definitely in the comment section, leave what you think about this portfolio. Maybe perhaps even share one of your pies on M1 Finance. Other than that, thank you for watching.